Hello, investors. This is Ted Zhang and Connor Bates is back with us. We're associate portfolio managers with Revere Asset Management. Today is Sunday, August 11th, 2:03 p.m. Coming to you from Fort Lauderdale with this weekend's Revere Roundup weekend walkthrough. So last week was quite the eventful one. So we're gonna quickly break that down and talk about a few stocks we're seeing holding up and kind of just our thoughts for the next week. So jumping right into it, the GROTECTION gauge, market leaders, short-term trend and medium-term trend are all at red bearish downtrend arrows. We've been talking about it all week, still below those key moving averages. We do have the Dow floating above the 50-day, so that is currently marked as yellow. As always, we're still above the 200-day moving averages, so the long-term trend is still up. So let's jump right into it. We're going to start off this week actually with the New York Stock Exchange Composite and then the NASDAQ Composite. And the reason being is they're the composites, they're the stock exchange composites. And so it gives a better picture actually, in my opinion, than the S&P 500 and the QQQ ETF. So the New York Stock Exchange is right here. Recently, with that breadth expansion from the small caps and mid caps, we did see it go into new all-time highs. Then we had that reversal week followed by this huge down move. And so far, this is a base failure. We still held the lows of this of 17,000, about 300, but there's just a lot of volatility on the right side. As you can see, there's a megaphone-ish pattern now. And on this break, these 3 days down, we're on increasing volume, which is notable. And then this rally so far is on contracting volume. That's exactly the opposite of what you want to see in a healthy acting market. Huge move down, weak rally up, and with volatility contraction is precisely what a downtrend looks like. If you think about it on the upside, like for example here, let's just take an example here. Big move up, tight days, and then we continue higher. Big move up, tight days, and then we continue. And now it's the opposite type of action. The NASDAQ composite is an entire composite, while the QQQ is primarily a proxy of the NASDAQ 100, which is why I do want to show this. Let's go to the weekly real quick. We had this huge cup with handle breakout into highs, but recently we've had 3 pretty big week down on a lot of distribution. And recently this wedging action off the 200-day has been almost below average volume. So that is definitely not what we want to see either. Still below the 100-day. 20 days, 21 EMA is declining now, and 50 days also declining. RS line is lagging as well. So now jumping over the S&P 500. Picture is pretty much the same. Had those 3 big days down on huge distribution. See all these red bars right here signifying distribution. In this rally, even though it's tempting, it's on contracting volume, and we haven't gotten a fall through day yet. So we definitely urge caution here in loading up too much. Even though the weekly you can say is a bullish counterattack bar or reversal bar, whatever you want to call it, reclaim the 20-day and this previous breakout level. This volatility, this heightened volatility, just increased uncertainty and just whipsaw to the upside and downside. And in my view, Connor could come in here if he wants with his view, but this is a bear flag within a downtrend. We still haven't broken this downtrend line. So I'm operating from the expectation that we're still in a downtrend and rallies will be sold into. And you also see the 20-day moving average crossing below the 50-day, and the 50 days declining as well. Equal weighted. I mean, we talked about this huge bearish weekly engulfing on huge volume. We did find support, but again, it's just looks like a bear wedge here. QQQ, pretty similar to the NASDAQ. We had this weekly candle on huge volume that reclaimed the 40-week and 200-day, but now we're just wedging back into these previous highs and the 10 EMA on contracting volume as well. Equal weighted, just a complete failed breakout. Huge downside break and still below the 200. Just not good action at all. Mid caps, pretty much same thing. Massive bearish engulfing bar. undercut the 200-day and just have this weak rally back so far. And this is not what you want to see in with constructive action, a megaphone type pattern. IWM, just huge failed breakout as well. I mean, there's really nothing too much else to say here. Dow, probably the strongest out of the ETFs, still above the 50-day, but also a huge failed breakout. The VIX, this was the biggest move in the VIX since the COVID crash. And this was, as you all may be aware, from just a bunch of different factors in the markets in the world. Some cite that's from the yen carry trade unwinding. Others say it's from recessionary fears or even geopolitics, uncertainty around the election. But it's probably a combination of all these factors that led to this quote unquote mini crash that some people have been talking about. And we've seen the VIX decline quite a bit now, starting to pierce this 20-ish level. And if we see this come back to sub 15, 14, 13, that would be really, really constructive. But I just want to note that if you look back at the big VIX spikes in the past, the lows in fear or in volatility often come before the lows in price. So we'll see what happens with indexes. And like I said before, I'm operating on the assumption that rallies will be sold into right now, unless we get a follow through day or some sort of indication that a lot of stocks are looking to participate. Yields as well. The 1 year, 2 year, 10-year, 30-year all tumbled off recessionary fears. And yeah, that led to bonds being bid up a lot. And the correlation between bonds and equities have reverted back to the classical correlation of when equities are moving higher, bonds are moving lower, so that inverse correlation. The dollar also with yield sliding, it slid as well on that big break. This is also just bear flagging right now into the 10 EMA. Gold sitting up at all-time highs. This is really constructive. It definitely looks like it wants to move higher. Silver, not as healthy whatsoever versus gold. We pulled back to the 30-week moving average, found support so far, but it's very volatile and all over the place right now. Heading on to some Bitcoin. Yeah, this stage another undercut reversal so far, and we're just back into the middle of the range. My expectation is there's just a lot of volatility here, and this will probably continue this way for some time. This base does not look complete whatsoever. It definitely needs to build a tighter right side for us to get interested. Continuing on, some quick breath. We look at this per market monitor, or at least I do, and a lot of numbers have flipped red, just showing that under the surface stocks, the picture of breath is not there at all. And I wanted to point out these 3 days. We had 3 days in a row of over 700 names down 4% on the day, and that just really indicates potential weaker action ahead. Net lows and net highs lows on a longer term time frame, 136 month, 52-week, year to date are all seeing net lows. S&P dipped into net lows as well, but it's now kind of back to neutral. NASDAQ, huge net low spike on that wash. We're still seeing net lows here, even though they've contracted. NYSE and NASI both in a downtrend and coming off the overbought reading. That's the NYSE, and then this is the NASI. And then CNN fear and greed. We are in extreme fear, and this is the first time we fell back into this reading since that August 2023, November 2023 correction. So this is a time to start looking for contrary indicators, and this is definitely one of them. But that doesn't mean we're just going to plunge back into the markets without price and the stocks confirming. AAII, it's nice to see that bulls came off a lot from that highs of 52.7% reading. We're still above historical averages, but bears did come up a lot significantly from that 25% reading to 37.5%, which is above historical averages. So with both above historical averages, that just tells me the bulls are the bulls are coming down a little bit, but still remain bullish, and then the bears are getting even more bearish. It's just a push and pull right now, hence all this volatility. The NAM exposure came down slightly, still in the elevated areas. If you see, like, we bottomed at 25 in that other correction, and then in 2022 we actually went down to 12.61. So historically versus other bottoms, we're still quite elevated here. Put call ratio though did spike almost to 1.5, so definitely indicating some fear came into the markets. And then finally, this was all over the place this week. At one point, there was like an 80% chance for 75 basis point rate cut, and now that's completely off the table. And now we're seeing 48.5% probability for a 50 basis point rate cut and 51.5% probability for a 25 basis point rate cut. And so all in all, there's still a lot of mixed signals between our sentiment gauges, breadth, price, but overall, I'd say it's still less is more. Got to be patient here and just wait for the stocks to show their hands. And Connor will talk about some sectors we're watching, showing relative strength, as well as names that we are tracking as well now.
Yep. Can you see my screen?
Give me 1 second. Yep.
Sweet. Yeah. So good, Ted, that was a good summary. And what he just finished with is, yeah, there's a lot of conflicting signals right now. But I think our best gauge is going to be the action from the stocks. Are we getting positive feedback on new buys? All those things. But that's going to be what we want to focus on, especially with so many mixed signals across the board, with breadth, indexes, and sectors. So with that, I'll start with ITA. We're watching this aerospace and defense. It pulled back to the 50-day on general market weakness, and now it's starting to rally back up, reclaim the moving averages. And one thing to note here is that these military stocks are some of the best setups in the market right now. Lockheed Martin, just extreme relative strength on this one. NOC, this is another one, RTX. So definitely the stocks in this group are, clear theme here. So ITA's on watch, and then a way to play that is with DFEN. This is the levered ETF that tracks ITA. And then another sector, I'll bring up HACK. This is still working out of a big base. It held this, undercut this 200-day and got back above, and these moving averages are kind of setting up a launch pad here, and you have a clear downtrend line. So this is a multi-month base, couple shakeouts below, and now like see this, tighten up on the right side. So those are two sectors. Other than that, a lot of them are just kind of in no man's land right now. Obviously big breaks to the downside, and now a lot of things are rallying up into declining moving averages and resistance. So kind of wait and see how they play out. But yeah, stocks wise, we're still finding some names that are looking good. I've got 10 names today. A lot of these are pretty much what I covered in the Friday video along with the Friday podcast. So I'll just be pretty quick because pretty much the same names. But TMDX, trading right at highs. All these moving averages are stacked, relative strength lines breaking out, strong name. And this medical group is pretty strong right now. Palantir, arguably one of the strongest stocks in the market right now to me, and it just is coming off a 40% rip in 5 days. So short term, this is extended, but big picture, it's finally getting above this huge breakout through 30. So this is definitely one to watch on any weakness for an entry, and if it can tighten up a little bit, but short term it is a bit extended. ServiceNow, it closed back above this 800 century mark. It's got a huge multi-month base coming against this downtrend line. This is probably my favorite idea for the week ahead, and this name is just an absolute stud of a stock. Consistent earnings, consistent sales, institutional ownership is big, and this really checks all the boxes for canceling. So this is probably my favorite look heading into the week. Uber, this one is coming out of a deep, you could argue this is a bit of a double bottom base, and clearly this has been underperforming for quite some time, but The fundamentals are good. They had a strong earnings report, and you can see their earnings and sales margins gapped up on volume, and now it's getting back above all the moving averages. So don't want to take your eye off this one. And this is just a good case in point of that. This led off the October bottom here from doubled from, this 40 area all the way to 80. And then a lot of people took it off their radar, but fundamentals haven't really changed, just prices changed. But now price is starting to cooperate with the fundamentals. So this is definitely one we're watching. And, it looks a little bit sloppy right now, but that could change. ALNY, this is kind of like a high type flag. You see these ants lines on earnings, huge volume, and now it's getting tight. It's kind of forming a pretty low risk pivot here. Lilly, we bought this one on Friday, pulled back the general market and then had a strong earnings gap. And yeah, just good news about, GLP-1, all that stuff. There's a huge use case there. And this is another, Can Slim style name, has institutional ownership, super liquid, earnings, sales, theme, something new. So definitely like this one a lot. If we zoom out to the weekly, it's just been trending on this 40-week pretty nice. And that's a statement weekly candle last week. Melly, this is obviously a pretty higher price stock, but rock solid fundamentals and breaking out of a huge multi-month base while the market's been correcting. So definitely beach ball underwater. Spotify still hanging out right around highs. This hasn't been a friendly one on strength to buy, here. Now it's coming back in. So maybe if it gets volume, it can finally trend out of the space. Kava, food stocks are really lighting back up. This one had strong day on Friday, above the 50-day on volume. And we still love the story here. We traded this one from back here all the way up into this 98 area. But now we'll be looking to get re-engaged with this one. And then Sweet Greens, it had a super strong earnings gap and close, gapped up and then closed high day. So this one's very strong stock, and this on the weekly looks good. It's been trending up to the right really nicely. And now it's starting to break out of this weekly base. So especially with the food stocks, they're turning back around. And the retail restaurants, the industry groups actually ranked 80, but a lot of these stocks are trading right at high. So maybe this group can start to turn around. But not Summarize is still able to find good amount of leading stocks. I think they're revealing themselves as leaders, but just got to be patient for low risk entries. Some are quite extended here, like Palantir. So this isn't the market to be chasing strength. So just focusing on the names standing out. So if they do pull back or they start to tighten up, those will be the ones that we'll be focusing on. Ted, you want to go over earnings and
Yep. So I'm just gonna highlight a few. The bulk of earnings season. You can see my screen, right?
yep.
Okay. Yeah, the bulk of earnings season is pretty much over. We still have a bunch of different names here, but they're less significant to the overall markets or indexes. So I'll just pick out a few that I'm looking at. The first one is ONON. And actually, that is a name that's looking really nice right now in this IPO base. And if this can be a catalyst to propel it out of the space, that'll be definitely a one on high watch. We've talked about this name numerous times. Connor, I, Don, Dan, we all own these shoes, and we're seeing it become more and more popular in gyms outside when we see other people walking around. So this one's definitely catching some traction. And the other two names, just Home Depot and Walmart. Home Depot's Tuesday before earnings, and Walmart's Thursday before earnings. That should give us a decent picture on how strong the American consumer is with their earnings and their forward guidance. So just pay attention to those two as well. And then in economic calendar, we do actually have a big week. Starting Tuesday, we have PPI and core PPI, and then Wednesday, CPI and core CPI. So those would be really big. And in this current narrative, what we do want to see is we don't want to see a resurgence in inflation. But honestly, honestly, the market at this point probably would like to see a little bit of inflation just to calm those recession worries. Thursday, a whole bunch of economic data, jobless claims, more manufacturing surveys. So retail sales, industrial production, business inventories. So all this data on Thursday will really tell us how the U.S. economy or the picture of the U.S. economy. And then Friday, we have consumer sentiment, housing starts, and building starts. Some more economic data on Friday. And besides this, there's not too much to talk about. When the market becomes active again, our videos will gradually or just naturally become longer. And right now, we don't want to just blabber on about just random things just to fill the minutes of our videos. So, Connor, do you have anything else to talk about before we wrap it
Nope,
up? Okay.
that's everything.
Yep. So that's gonna wrap it. As always, we would love to hear from you. My email is ted@Revere Asset. Let me bring up this right here. My Twitter is Ted H. Zhang. And then Connor's is Connor@RevereAsset.com. Twitter is Connor Bates _. You can also reach out to Dan and Don at RevereAsset.com. Our phone is 855 Real Wealth. That is 855-732-5932. We named our flagship portfolio GROTECTION for a specific reason. And actually on the podcast, we recently named it the dual mandate of Revere. Our goal is to grow assets while the market's in an uptrend, while the leading stocks are acting well, and it's to protect assets when we start correcting into a downtrend. So right now we are in that protect mode, but we are staying flexible and open to what the market presents us to re-engage if the time comes. And if you're interested in becoming a client, you can reach out to both of us. And with that said, I'll wrap this weekend's video up. It's Sunday, August 11th. Now it's 2:25 p.m. And this is Ted Zhang and Connor Bates telling it like it is. Thank you for listening and have a great week.